Well, hi everyone, and welcome to this week's edition of Feeling Smarter. As always, I'm joined by my co-host Tim Miller. G'day, Tim. How are you?
Yes, Aaron, I'm going pretty well. How are you doing?
Very well, thank you. Well, today we're going to be looking at the preparation at 1 July. Now, we have historically on this show talked about tax planning strategies and so forth. So we're not sort of going down that path today, but we know the end of the financial year comes with it a number of things that we need to consider, whether that is around valuations when it comes to property, whether it's that we're looking to establish brand new funds, and there are a range of considerations there. So maybe get you to start on some of those key things that you think trustees and advisors need to be aware of, and starting to have conversations with those clients around these 30 June, 1 July issues.
Yeah, and look, and I'm glad you sort of posed the question as I guess the 30 June, 1 July issues, because I think they certainly go hand in hand together in respect of some of the 1 July issues that we are looking for, such as, what strategies are we implementing from the 1st of July, one about fund establishment, but also things like pension establishment.
Yep.
Then some things such as pension establishment are going to need a lot of 30 June activities to occur prior to being able to commence that pension. So whilst you can make the request
Mhm.
to commence a pension, you might not actually finalise that pension commencement until a number of other steps have been followed.
Yeah, so
Um,
just on that, I guess, because
yeah,
that was one of the things that we made a change, a very deliberate change on our Smarter SMSF platform, that fact that you could now do those multiple steps around the pension commencement. So quite often you see I call it disconnect, but it's
yeah,
probably too harsh of a word, but the disconnect between the advice that is being provided to commence the pensions and then the actual documentation that happens, which ordinarily doesn't occur until the financial statements are prepared, because you need your value. Now, we know the challenges that transfer balance account reporting has created, but one of the things that we've done is be very clear on the fact that if you want to start that pension on 1 July, you can actually create the documentation, but recognize that there is an unknown balance at that time, and that there will be a second step effectively that will confirm those balances. So we're not getting into that position of having to retrospectively go back and date documents, which we know is not the right approach. So yeah, I think that's a really good point there, just to note that making sure that procedurally you're getting those things in order, because pension commencements is certainly one area that there's a much greater focus obviously happening with.
yeah, correct. And look, I think we both know full well that with preservation age moving to 60 from the 1st of July, that this could be one of those years, almost like 2007, when we had non-assessable, non-exempt income introduced. There was a sort of a big uptick in pension commencements. This could be one of those sorts of years where we see quite a number of pensions commencing. So one for people to be mindful of there. And I think that's sort of the alternate to pension establishment is obviously fund establishment. And now fund establishment is generally a process where people say we'd like to set our fund up from whatever date, and that date, 1 July is a convenient date, but again, the fund establishment requires such things as rollovers, but more importantly, something that's come to the fore over the last couple of years is clearly things like director IDs. So,
Mhm.
setting a fund up with a corporate trustee from the 1st of July means that you have to have undertaken certain activities prior to that, including registering for a director ID with ASIC.
Yeah, and one of the things that we see quite often, we see the fund get established on the 1st of July,
Yep.
but we know each and every year ASIC takes their additional cut in the inflation cost of the ASIC fee. So quite often we do see people look to establish the company maybe on the 29th or 30th. So you establish that prior to the end of the financial year, because we know that a special purpose trustee company has no obligations of its tax returns and ABNs and so forth. So you can kind of see the documentation around the structuring of the fund actually straddle two financial years, but we know effectively we don't want the fund being established until the 1st of July, because of the fact that we would have compliance obligations around lodging of a return, and of course the audit would need to be done each and every year as well.
Yeah, absolutely, absolutely. And then, for me, probably so I go one, pension commencements is a big 1 July thing. Two is fund establishment is another one, and then three is from an administrative point of view, is that whilst we prepare our financial statements as at the 30th of June each year from a self-managed super fund point of view, things such as our minimum pension obligations are ultimately calculated based on the member balance on the 1st of July. And that requires the assets to be valued immediately prior. So that 30 June valuation is a critical step, not only for fund pension establishment, but for annual pension obligations. So the valuations, now is the time that people really need to be, for your non-standard assets, of course. Now is the time for people to be obtaining their appropriate valuations. And, we've had that timely reminder from the tax office not that long ago for funds that haven't had any valuation increase or valuation changes for at least 3 years. They've been sort of sent effectively a please explain letter as to why the valuations haven't changed.
Yeah, and valuations, this is one area, of course, that, as you've certainly highlighted there, has been a growing level of interest. And I'll say the ATO and therefore the audit fraternity around this, the requirements of 8.02B being satisfied. Are we getting to a stage where we're seeing more and more elements of the annual compliance process needing to be addressed at particular times of the year? So market valuations, are we seeing more people now being proactive in getting the clients to go and speak to the valuers using third-party valuation services and so forth right now, rather than looking at that and then sort of having to go through the process as part of the annual compliance function that may be done 2 months, 3 months, 4 months, 5 months, 11 months after the fact?
Oh, look, I think there's no doubt with certain asset classes that is 100% the case. I think that the issue still with self-managed super funds is always going to be that there's an element of self-managed funds that still invest in private unit trusts. And from an accounting point of view, the private unit trust is often, pushed to the end of the cycle. And therefore the valuations of the assets contained within those private unit trusts is then moved there. So, I think we're halfway there from that mindset, but if we can get that final bit there of and I think being in administration, as long as both of us have been, people will always leave those more awkward investments to the last minute because it's about getting funds, getting momentum from a lodgement point of view. And so your non-standard assets, your unlisted companies, your private trusts, and that, trying to get them into that same concept of let's get onto them early, because then we can also identify problems early with them if there are any issues associated. But getting those valuations certainly, takes away that last minute panic from a lodgement when we're trying to deal with that later in the year.
Yeah, absolutely. Well, I'm sure there are a range of other areas that we could certainly be talking about here, whether we're looking at investment restrictions and in-house asset rules and stuff, which we don't have time for today, but we wanted just to highlight for you some of those key considerations as you hit the end of the financial year and start to work into the new financial year. Of course, many of those documents that we've spoken about there, whether it's through fund establishment companies, pension commencements and more, are all available on the Smarter SMSF site, whether you do that via subscription or simply pay as you go. Tim, thanks for joining me again today.
No worries, Aaron. Happy end of financial year, and I look forward to seeing you in the 24-25 year.
Absolutely. Take care. Bye for now.
Bye.